Good afternoon. This is Ken Long at tortoisecapital.net with a review of 3 Tortoise chat room quizzes, our preferred method of teaching our techniques in an applied collaborative learning environment. So we're going to take a look at a swing trade in DVN, Devon Energy. Quiz 2, we're going to look at the use of core and turbo technique with symbol EWW, which is the exchange traded fund for Mexico. We're going to look first at a core swing trade frame and then how we use that swing trade to set up an intraday turbo trade in that same symbol EWW. And then on the third quiz, we're going to look at how the following day we played the intraday continuation trade in the same symbol with the learning point about resiliency and knowing your market conditions. Here we go. So the quiz number 1, the Devon Energy swing trade on daily charts looks like this. The blue line indicates the day that we're stalking it, and it had a swing high around 32.42, and it had sold off for 3 days, and then had 1 day of recovery. This gave us a 551W setup, so we're stalking it on the day of the blue line on 4 April, and 5 cents above the high is our mechanical entry. 5 cents below the low of the setup day is our execution stop. That's the price if it tells us that the swing pattern is not valid. We're using a position sizing stop of $1.50, so we base our actual position size, dollars at risk divided by the position sizing stop gives us our position size. But the execution stop is the one that tells us this trade frame's not working. So if it had opened and then failed through there, we would take a fractional position size loss. The rest of the trade frame goes like this, with the long-term fair value pointing downward. We would be willing to go short at this price at 30 if it goes below the Bollinger Band mean. So on the upside, we're expecting resistance at this swing high at 32.50-ish. I would be considering adding a second position if it showed strength and the market were strong beyond 32.42. So the next morning, the market opened here at 31.20. I should also say that the recent market conditions have been sideways and volatile, which has favored the strategy of take a bird in the hand worth 2 in the bush. So cash them when you have them in order to make bank in uncertain market conditions. The rest of this trade frame is that if this had gone short and broken through the long-term fair value, we would be looking at adding a second position short here at 27.50 below the swing low of the 10-period moving regression line, with the third below the previous swing low at 26.50. So that's what those markers look like. So now we frame the trade in both directions. The next morning it opened at 31.20-ish, and then we took our entry, and then there was strong follow-through during the day. So let's take a look at some more follow-through. The next day, actually that day it closed very well at 32.25. The next day it opened up near the support level, or the resistance level, excuse me, and then immediately started to sell off. We elected to take the bird in the hand here at 32.20, and so we ended up cashing 2 execution risks, which equated to 1 position sizing risk in a market that found resistance where it had previously found resistance, and rather than be concerned about letting it come all the way back to the Bollinger Band mean and making the last move that it just made. The last time it was here and started to fail, it came all the way back to 30.75. So it seemed reasonable in this market condition to take the gains where they are. When we look at that a little more deeply, now we're looking at 30-minute charts. This was the moment of entry. You can see that the market has sold off, found support, the dragon rolling upward, and this is where that mechanical entry hit at 31.20 with our execution stop here. It closed well that day, opened up with a gap up the next day, and then started to sell off, and the rest of the market was also selling off, so this looked like a good place in this yellow region to go ahead and cash 2 execution risks and 1 position sizing risk. The rest of the follow-through over the next 3 days, including today, was one of just continuous weakness. And I want you to notice that where we had entered with advantage, price moved all the way back down to here not once but twice. The fact that it had a swing high, a lower high, a lower high, gives us reason to be interested in shorting this in here if we wanted to. But right now I'm content to wait for the next day. And if it builds on this last minute weakness here, if it falls below 31, I'm ready to get short. And then if it violates the belly of the dragon here at the previous swing low, I'm ready to add a second position short. In terms of market conditions, you'll notice that the MACD histogram that we use that compares the 10 and the 30 period moving averages was in the summer condition, reached a peak right about the place where we were looking to exit, and it rolled over. Then it's in the fall, comes down to the zero line in MACD histogram, which tells us we should have a short side bias, which is why we're now interested in the short side. And so in this market condition, you get a chance to make bank. Go ahead and make bank, recognizing that there will be other opportunities to take advantage of these shorter term swings. After this moment of weakness here, the market continued into the winter phase and now began a slow climb in spring. And currently, as the market closes today, it's right at the zero line, and we would be framing this trade to be ready to go short as described. I would be willing to get long at about 31.60, so if it held a double bottom support here, I would look for it to come up and retest this previous high. And if we're willing to make this trade from here to here in cash and R, then I'd be willing to make this trade from here to here in cash and R. And so we will lather, rinse, and repeat. So that's quiz number 1, taking a quick look at a swing trade in Devon Energy using the daily charts, and then how we can refine that using a shorter term swing pattern using 30-minute charts and still considering ourselves to be swing traders in this environment. There's actually more that you can do if you're a true intraday trader using further turbo techniques, and we'll see an example of that in quiz number 2. So that was available for people with more time to look at the shorter time frames. This is a very tradable intraday move. Shifting to quiz number 2 now. This was the swing trade frame that was posted by Dan in the trade chat room, and I used it shamelessly because he had set up a really nice day trade frame. And since Mexico, EWW is one of my usual suspects, I like the way he framed this out to help me prepare my trade for the next day. Since I always look at EWW, it is liquid, it is not truly correlated with the S&P, so it will often move with volatility, sometimes with and sometimes against the S&P. So it's very, very tradable on both day and swing trades. And so what Dan observed was that the emerging markets had been lagging the U.S., but EWW lately had found a nice move off the bottom, pulled back, found support, and had gotten into this sideways quiet channel, and he was now prepared, along with me, to go long if it were to break above like 45. And then with the second one, if it gets above the long-term fair value here and above the dragon, he'd be looking at possibly a second entry. And that's reasonable given that it had just crossed the zero line on MACD histogram, so we were in the summer. But at the same time, we would be ready to go short if it had violated the swing low here at 42.50. So taking advantage of the collaborative learning environment in the chat room, I was able to set up a swing trade, but also an intraday trade. So what happened the next day was it had gapped up, and then right from the beginning in the yellow region, it moved 25 cents off the swing low. That's a hybrid frog. This is a routine entry. It found support and started a second leg up. A routine second position was added. Found support in this sideways quiet channel when price crossed back over the long-term fair value, and the PSAR indicator gave us indications of additional strength, and the MACD histogram gave us continuation patterns. Third position was added, and then it consolidated here as we were approaching lunch into a sideways quiet channel that was also a Z3P, which means that the outside Z3 bands of the three standard deviation Bollinger Bands had pinched to less than a frog box. That is a technical meaning which you learn in our workshop. And that sets up an additional trade where you can go long at the green line, number 9, or short at number 10 if you want to go short. So holding 3 positions with money in hand and having outperformed the rest of the market to a considerable extent, this was not only a candidate for additional follow-through. We'll see in the next chart it went well above 46 later that day. So we would be reasonable to consider a 4th position here, or to preserve the gains of a 3-size position in order to protect the move potentially back to the downside. The yellow dot is our symbol to say also consider whether or not you would want to go short in the strongest position of the day, or simply just preserve that gain. If you were setting up the short side trade, here are 3 downside targets that we would look at. The first one would be a return to the long-term fair value, which is the volume-weighted average price intraday. Coming back to our support level, and notice all this volume, that's a clear target of interest. And then the third one is if it had fallen through here, it would get back to the opening or the low of the day. And so that's our price ladder to the downside. So now we've framed this in both directions. Now in our home study course and in the chat where we mark things up with these little quiz markers, these are the lessons that we teach about. So number 1 would be the idea of the hybrid frog entry and why it's 25 cents off the low was significant. We noticed the strong volume of support that was built right here. That means these are all new hands that are owning this, so that's actually going to be a support level. Number 3, we noticed that MACD histogram had come down above the 0 line and began to cross back above itself. That's confirmation of continued strength, and so we're expecting additional moves up, and that supports this entry here above the PSAR for a 2nd position. Number 5 is that when it came down to the 0 line and held support once more and started to move up, that's why this is a good 3rd entry, or if you had gotten out in here, this would be a moment of re-entry. So number 7, I'm already starting to think that if this fails, I don't want to be short because this was such a strong mover compared to the rest of the market, as you can see. Number 8, we noticed the Z3 pinch conditions occurring after it had pulled back below the long-term fair value, which sets up our standard frame of breakouts from the Z3 lines. And so 9 is our long side breakout of the Z3. 10 would be the place to go short or to cash the wins on this 3-sized position. At 11, we're making a decision that if we want to go short, we would set up our trade frame to the downside targets at 12, 13, and 14 as previously described. And then at 15, we notice that MACD histogram has come all the way back to the 0 line. So this is a moment of perfect indecision. That's why the volatility had dried up, so we're expecting a big breakthrough in either direction. Even if you don't make that trade, this is certainly a trade that pays you during the day for having applied the turbo techniques to something that we already were in as a swing trade with an additional swing position here. So the intraday allows us to leverage that information and get a higher return on our capital. The next trade that we're going to look at is a follow-through or a continuation pattern the following day. So that last one was Friday. This was the Monday trade. And I want you to notice that the previous day we were loving it at 45.70. The next day when it opens, it's already above 46. So this was a 2nd day of follow-through in a very strong sector in an upwardly trending market. And so we were willing to use that same hybrid frog and got long, but this time it didn't follow through, so we got out at the red line. We then, as it was testing the low of the day and getting ready to close the gap, we got short, but it found support, and so with the rest of the market up, we took a fractional loss here. After additional confirmation above the VWAP and above the 270 period regression line, we decided to get long. That didn't follow through, and so we scratched that trade. So the first 3 trades, fractional loss, fractional loss, fractional loss, and this is where the resiliency comes in. So it finds support at the 0 line. The rest of the market was up, so we just go ahead and get long like we're supposed to. Don't overthink it. Add a 2nd position when it breaks out of the Z3 pinch and makes a new high of the day. Decide to cash that to pay for the previous scratches, and now we're at least back to break even for the day. This doesn't fail back to the VWAP. Instead, we find support at the 0 line. Off it goes again. Makes a new high of the day, so we're long. Add a 2nd position. Now we feel like we're in line with the market. Add a 3rd position. Make bank at the Z3 pinch. re-enter second position as it moves out of the Z3 line. So we get two series trades with large position sizes that when we're right, we're large, and it more than compensates for the initial friction or the inability to gain traction. And on the big moves of the day, follow the rules in the usual way. We just get long. And now this is a case where the rest of the market started to tank. We were able to pick up a fraction here on its move back towards the volume weighted average price. And then as we're approaching the afternoon of the day, that was enough. We just noticed that there was a Z3 pinch, but we didn't trade it. So those are the three trades we wanted to talk about today from the chat room, and the use of the quizzes and the way we mark it up to learn different lessons about swing trading, about the combination of core and turbo trading that combines swing and intraday, and then a continuation trade in the symbol that we'd already built some connectivity with, and the important emotional lesson learned about resiliency and knowing your rules and using risk management to allow you to stay in the game and execute from a emotionally balanced mental frame of mind. So thanks so much for your kind attention. This is Dr. Ken Long at tortoisecapital.net. Keep your risk measured and your powder dry.